Hey, happy Friday, everyone. Marty Missouri here, February 17th, 2023, with your end of week stock market snapshot. I'll circle back either later this evening or over the weekend with your weekly economic update. That one will be an interesting one this week. I thought I'd start today. My intent is to keep it quick if I can, but you know me. But anyway, so I thought I would start today just by pulling over the morning note that we send out to clients. And what I wanted to show, first of all, was our leading economic indicator to coincident economic indicator ratio. We'll probably show this again on the economic update. But that's really rolling over. These red shaded areas are recessions, and you can see there's periods where we roll over and we don't have recession. There aren't periods where we roll over like this and we don't have recession. So that's still our base case. Now, what I started this morning's note with is, ironically, headlines are suggesting that what's ailing the market lately is stubbornly high inflation, and that's going to abate over the coming months. For sure, it's going to abate, all things being equal, because of what inflation was doing last February, March, and April. Coming off of those ramps, all things being equal, even if we get the same pace we had in January, the year-over-year number is going to come down. Now, we could have just massive inflationary forces that offset that, but from a base effects, that's going to come down. I don't know that the market cares about base effects. Maybe it just cares about what the number actually is. Remember, investing or trading is all about anticipating what other people are thinking and how they're going to act on that. So what I did is I showed that, but then I showed CPI, right? Here's CPI falling like a rock when this indicator does this. And yeah, it's doing that now, but of course it still sits at insanely high levels. I asked the question, of course a weakening economy brings lower inflation down. The question essentially is whether or not it takes down the Fed's target without recession. Will it do that? We think that's doubtful, target being 2%. So with inflation about to mount a serious decline over coming months, stocks should be set to seriously rally, right? Well, yeah, you have every right to think that, and I think that when those inflation prints come out, perhaps that will happen, right? However, there's a bigger issue, and I've shown you this before, and it's that orange line, right? S&P 500 earnings still floating out above here, while this particular indicator at least is really rolling over. Reminiscent of this when we were all kids, right? You see the cliff, you see earnings holding up. The next leg would be earnings coming down, and that would be your recession, right? That would be the market or earnings responding to recessionary conditions, and stock prices are very likely to follow. That's kind of how this all works. And interestingly enough, just as maybe a microcosm of what I'm talking about, S&P's down 1% today. The NASDAQ is down, at least as I speak, over 1.5%. Add that on to yesterday, and this feels like something, right? Well, utility stocks are up almost a full percentage point. Staple stocks are up 0.5%. Healthcare is up 18 basis points. So those are the recession stocks, right? And those are positions, of course, in our core portfolio as well. We're very diversified. So here we have the equity major index rolling over. The Dow's kind of hanging in there. But these key sectors that basically would be sympathetic or consistent with the story I'm telling about coming recession, at least on a Friday in February, those things are rallying pretty good. So when I do the analysis, the macro analysis a little later today, I always look at the trend in things like defensive stocks versus cyclical stocks. And in fact, that's one of the indicators. There's a couple of variations of that we look at within our macro index. And so if that's worthy of comment, that'll be part of the video a little later today or over the weekend. Okay, so getting to the technicals. Remember I said on Wednesday this market's feeling heavy to me. Well, Thursday, yesterday, the day after that video, we broke down a bit, right? Nothing major just yet, but this morning we gave up so far the 20-day moving average. Now recall that when you go back through this bear market, at least through the last year of it, this has been an important indicator to keep our eye on, right? When the S&P breaks above, you tend to get a pretty good rally. At least you have during this bear market. Here we broke below back in last April, came up, tested it, then failed it, and kaboom, had quite the sell-off. Here we broke above it, kind of almost an island reversal pattern. We've looked at these in years past, and then failed it big time, right? Then we broke above it, tested it, and then passed the test, and then we had this nice big rally that ended last August, broke below it. That was all she wrote. The October low, which is the bear market low so far, came back above it, broke below it, came back above it. Well, here we are breaking below it as I speak at you here today. And recall that that heaviness really came from looking at rolling over here on the MACD, and then this coming off of this overbought condition here on the RSI, and looking back again during the past year or so when we were overbought and we got our sell signal, we had a pretty good decline. So here we have folks coming from a high level on the MACD and from an overbought position on the RSI. Yeah, that's a combination that gets precarious. Doesn't mean it has to play out. It's just what we're looking at right here today. On the hourly chart, recall that on Wednesday we painted this this consolidation pattern right here, and I cleaned that up and actually drew the lines here on my chart and kind of compared it to this one back over here, right? I don't know what happened to that rectangle that was on there, but anyway, I'll redraw it. And remember back here when we were identifying this, we had a bullish look here. We had, the bullish divergences on both the MACD and on the RSI. Here we have another consolidation pattern, but as I pointed out Wednesday, no bueno right here. This did not look like a pattern that's going to break out to the upside. And so far this morning, it's trying to break out to the downside. So we'll see. Next week is going to be telling. Even the rest of today is going to be telling. We started out like this yesterday, and I think we got almost to even intraday, and then the market gave up the ghost there at the end of the day yesterday. So we'll see. Right now, as I said, technically the market's looking heavy. Looks like it's beginning to play out like the charts would suggest it should. We'll see. So I'll stop rambling there and let you go. Look for the next video either tonight or over the weekend. Hope you have a wonderful weekend. Thank you as always for watching and listening. Take care. Bye-bye.